All right. Good morning, everyone. Let's get going. Okay, last night's session in the on U.S. markets slightly down in the S&P and in the Dow. The Nasdaq managed to hold on to some small gains on the day, but more or less just kind of sideways action. We actually started out and we were trading down and actually spiked down relatively heavily at around the 2 o'clock part of the session and really just kind of found the bottom for the day and drifted up from there. Not a whole lot of leadership on the day, no real market data to speak of, not a lot of earnings news or any sort of corporate actions to really lead things of the day. So we kind of just had a couple stocks pushing us around in either direction. So I think important that this Alibaba IPO is going to come up. I think it's crucial to note that that is going to soak up a lot of money out of the market. I think that they're expecting to raise somewhere in the neighborhood of 20 to 25 billion dollars. So that is going to soak some money up out of the tech sector. I think it's already started to show its hand a little bit in the local stocks like Tencent, like Naspers, which obviously because of Tencent and some of those shares. But I think most of that is probably over with. I would have thought most of the guys that are looking to lighten up to be able to bid for this IPO have already done so. All right, in the Asian session, we had Hang Seng and the Kospi, which were closed today due to public holidays. But the other markets there were up slightly. We did have a bit of a bounce today in the mining stocks in Australia for the first time in several days. They've really just been the laggards. They've just been getting beat up day after day after day, so they are quite due for some sort of a bounce, I would say. I'm not saying that you should come and rush in and buy these things, but yes, they probably are due for a bounce. So maybe expecting a little bit of a turn up today in the miners here locally. All right, if we look at corporate action, you can see First Rank came out with full year 2014 numbers today. They had they already issued a trading statement before because they're higher than 20%, and the guidance on the trading statement were around 3 Rand 41, came in today at 3 Rand 40, so more or less in line with that guidance. Divi per share came in at 97 cents, and to be honest, that might be a little bit of a disappointment. Might be a little bit of a disappointment. I think if I'm not most of the guys in the market were probably expecting some sort of special div, and I know there was definitely some rumors around about that. But the numbers definitely look solid. If you look at the non-performing loans, the credit loss ratios, and the cost to income ratios, they're definitely kind of beating what some of the other banks are doing at the moment, which I think is obviously a positive for them. So, all right, we also have got Steinhoff, which is out today. The guidance on their trading statement was at 4 Rand 39, so keep that in mind for what we're going to see today. Revenue at 1.35. We're also looking for 1 Rand 2 cents on divvies for the expectation there today. So keep that in mind. All right. This morning in Asia, we had some data out of Japan. Tertiary industry index, a little bit less than expected, in line on the money supply numbers for M3. We also had consumer confidence, which came in a touch soft there, so we continue to see softer numbers out of Japan. France is going to have the trade balance numbers in just a minute. We're going to have local current account balance numbers at 10 o'clock. Then in the UK, we've got trade balance, industrial production, manufacturing production, and then later we've got business confidence here locally. So quite a light day on the data front globally. All right, let's get into the maps. All right, what I wanted to talk about today was just we're starting to see a tick up in volatility of late. So the first one I'll kind of show you is this. If you look here, I know that on the chart it kind of looks like it's moving, but when you pull it back to a little bit longer term, And you look at it over kind of a 5-year chart, for instance, you can see how this thing moved and chopped around and that sort of story. But there's a period through here, this is the US dollar yen, where it was the lowest period of volatility on record for that long length of period of time. Okay, we stayed in literally like a 2% band on the US dollar yen for about 7 or 8 months, which never happens. Yes, we are breaking out now. We're breaking out to new lows on the yen. The dollar's rallying against everything at the moment, and we probably have some more upside to this. I would say that we already broke out of what was a little narrowing wedge here, but that's not why I'm showing you this chart. I wanted to show you this simply because and talk about the lack of volatility, because we're starting to get some moves in some of the other global asset classes. Yes, equity markets have been moving for several years, or over the last couple of years, but they've kind of been drifting, and there's been really low volatility. And the reason why is because there's been no volatility in the other financial markets. So when you look at the European bond market and how much it's moved over the last little while, now you start to look at the currency market. So you look at the US dollar yen. We can also look at the euro dollar, which you can see here has had a huge move over the past month and a half. This is a 5-year chart, so let's have a look here. You can see it's just absolutely ripped down over the last 2 months. We're starting to get some real movement in some of these other asset classes. So look at the commodities markets as well. You look at the oil price. This is the oil price. The last 2 months, the oil price has gone from just south of 108 down to $92. Gotten absolutely smoked. You look at spot gold. Spot gold also has fallen, relatively hard in the last little bit. We've seen iron ore that's been decimated. We've seen currency markets which are really starting to move, and the whole point is volatility begets volatility. And so because we're starting to get some movement in the asset classes outside of equities, outside of these indexes, we're going to start to see that volatility move into the equity market. And you're already starting to feel it a little bit. There's been a little bit more volatility in the last maybe 3 or 4 weeks, and I really expect that to continue so long as we can. We've already started these big moves in some of these currencies and the bond markets and then the commodities markets. So this isn't going to slow down. It's actually probably going to pick up and intensify. So just keep that in the back of your mind that volatility is probably more than likely coming. All right, if we look at the U.S. dollar rand, we're kind of on the move here a little bit. I'm going to cut that there's one close there, because the next day you can see it, we spike back down below, close below there. That was at 10, call it 1079, this level, all right? We spiked up above that last night. You can see the close above it last night, and you can see that tiny little red dot, which is this morning session. So we are above this level. We haven't had 2 consecutive closes above this level. So I think that level around 1079 is very important. We've been moving out to the right here after really breaking down on the rand and then drifting down or strengthening up a little bit. We've put in this long consolidation. I'd expect us to move 20 cents out of this range. That's going to target us up around 11 rand to the dollar. And it looks like that move may have already started. I think if we can hold 1080 or hold below 1080 today on the rand, then I think we'll move up to 11 and move there rather quickly. All right, let's have a look at SA breweries. Okay, I showed this one in London yesterday and how we were pushing highs. This one obviously, because the rand's had some strength versus the pound, we're not pushing highs as of yet here on the local index. There's a couple things to look at really here. So you can see 590 definitely coming in as some sort of support level here. We talked about 590 when it broke out. Yesterday we came down. We actually got below 590 by about a rand or two. Nice little bounce off of that level in the afternoon session, and then we've weakened a little bit versus the pound overnight. So you can see there we're pushing back up off this level. I really think if we can hold there again today, we can probably see a reversal that'll take us above the recent highs up around 605 and maybe push back down up toward all-time highs. If we look at Investec, you can see Investec made this big push the other day up around $99, got all the way up to 99. And couldn't go any further. We actually got to about 99.50 or 99.60 intraday, came down to close below 99 at the end of the day, and pushed back down. Kind of starting to look like maybe we could make a little bit of a double top there. Either way you look at it, it's it's an important level that we've kind of failed initially. You can see there that we've gapped down as of yesterday's session, and I think that we can, potentially start to push back lower again. This one's really rallied and outperformed hard. All right, Naspers. If we look at Naspers, I know we've shown this chart a million times. Yesterday, obviously, we traded unbelievably well for most of the session. We're trading up around 1375 at a point, only to come back down and close at 1352. So we continue to hold this level around 1350, and we're going to need to see this, this things start to push up away from this level at a point. But bottom line is we're building some sort of real consolidation after we've broken out here. It's a classic bull market pattern. So I think that these things, the longer 1350 holds, the more bullish this becomes. And it's still managing to hold this pattern, even a lot of guys probably taking profit on, to buy some of the Alibaba IPO. All right, last one I'm going to show this morning is Bidvest. So if we look at Bidvest this morning, we've got quite a massive level here. We actually took out the closing highs, but I don't think that we're home free yet, because you can see there we've got a couple wicks up to 300, another wick up to 300, and then yesterday you can see we closed right at 300. So we haven't broken out on a closing basis, but in my mind we've got to really get a close above 300 to really officially be a breakout here. So watch this one closely. If we can push up above 300 early and push away from that level, then I think you can probably call it a breakout. But if not, then this thing can still potentially reverse, come back down maybe toward 280 support. And that's it for today, guys. Good luck out there.